Good morning, friends. Welcome to the morning con call. First up, we'll be discussing what we expect in Nifty and Bank Nifty from here on, as well as the key levels for both the indices. We'll also be discussing on the main sectors and stocks in focus in trade today, as well as the next few trading sessions. First up, a brief outlook on the update regarding the global markets. So in trade yesterday, the US indices ended their 3-day long losing streak. So if you see, even though there was a bit of profit booking in the last hour of trade, the major indices ended the session on a positive note. We had the Dow, which was up 0.76%, the S&P 500 climbed 1.04%, and the Nasdaq inched up by 1.03%. Currently, the Asian markets are also trading on a positive note. This post the official statement by the Bank of Japan stating that they may not consider to increase the interest rates hike, taking into consideration the volatility which is being seen in the markets. So this has had a positive impact on the Asian markets. We have the Japanese Nikkei 225, which is trading up nearly 2%, while GIFT Nifty is signaling a positive start for our markets as well, currently trading above almost 200 points higher. Coming to the update regarding our markets in trade yesterday. So yesterday the benchmark index opened with an upside gap of over 130 points. However, it struggled to maintain momentum at the previous day's high. Thereafter, through the trading session, the index experienced a series of gradual lower highs and lower lows, forming the day's peak. It dropped by nearly 400 points, ultimately closing below 24,000 level with a loss of 0.26% for the day. Currently, the index, if you see, is fluctuating near its 50-day EMA level. The daily RSI is on the verge of slipping below the 40 mark and is in a falling mode. The daily stochastic indicates bearish momentum as the fast stochastic is trading below the slow stochastic line. Going ahead, considering the gap up opening the zone of 24,400 will act as a crucial hurdle for the index. The index has been experiencing selling pressure from this zone from the past two trading sessions. Any sustainable move above the levels of 24,400 will lead to a sharp short covering rally up to the mark of 24,600 in the short term. While on the downside, if we see the zone of 24,000 will act as the immediate support for the index, taking into consideration that the gap up opening is there for our markets. On the derivative front, if we see the August futures ended lower by 0.19%, and the cumulative open interest of the current, next and far series has dipped by about 7%, which indicates overall long unwinding. If we see the option chain data, 24,200 has significant call open interest followed by 24,300, and on the put side 24,000 has substantial open interest followed by 23,800. For the weekly expiry, the put call ratio is at 0.5 and the max pain is at 24,200, while for the monthly expiry we have the put call ratio which is at 1.36. Now coming to the update regarding Bank Nifty. So the banking benchmark index Bank Nifty has also opened the session with a gap up yesterday, but it failed to cross the prior day's high and thereafter witnessed a sharp correction of over 900 points from the day's high. On the daily scale, if we see, it has formed a sizable bearish candle. This indicates underperforming the frontline indices from the last couple of trading sessions. It's also important to note that the index has slipped below its 100-day EMA level for the first time after 43 trading sessions. The daily RSI sustained below the 40 mark for the second consecutive trading session. Going ahead for Bank Nifty, the zone of 49,500 will act as the immediate support for the index. Any sustainable move below the levels of 49,500 will lead to further selling pressure in the index up to the mark of 49,100 followed by 48,700. On the upside, if we see, the resistance has shifted lower towards the mark of 50,200 levels. Now coming to the derivative data, so if you see, the August futures ended lower by 0.59% and the cumulative open interest for the series has surged by 3.9%. Coming to the weekly expiry, so today we have the weekly expiry for Bank Nifty. The put call ratio is at 0.53 currently, so clearly there is a heavier call writing in the system in comparison to put. So if there is a gap up opening and the index is able to sustain at the higher levels, we could witness a bit of short covering in trade today. Coming to the key market indicators, so in trade yesterday the volatility index has hit a low of 14.86 before surging over 26% from the day's low. The dramatic increase in India VIX over the last couple of trading sessions indicates significant rise in market volatility. Coming to the key sectors in focus, so in trade yesterday all the sectorial indices ended on a negative note. Technically, if we see Nifty Metal, Nifty PSU Bank, Nifty Realty are likely to continue their slight negative momentum in the next couple of trading sessions. Coming to the FII DI data, FII sold to the tune of 3,531 crores yesterday, while DIs counted them to an extent, purchasing 3,357 crores. That's a wrap of today's edition. Thank you for regularly listening to our podcast. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.